What's up, guys? So we're going to talk about, the importance of fundamental analysis. So fundamentals help you understand why price is moving. Technicals, basically, when you look at a chart, that is basically technical analysis. All the Japanese candlesticks, they're just the historical price patterns and what the charts are telling you. But you can turn it, you can turn on the TV and see fundamental analysis firsthand. CNBC, NBC, like all the news channels talking about, what the market is doing, Bloomberg, like that's basically fundamental analysis firsthand, the news. Fundamentals leaves clues, just like technicals. Leaders will get on TV and tell you their goal with the currency, interest rates, policies, or just their thoughts on the overall leader. So like you'll see reporters or people who work for specific companies will talk about what these leaders are going to do next week or the week after that, which forms, fundamental and sentiment analysis, which will show on the charts, aka technical analysis. It will give you the outlook of that country's currency for the upcoming weeks. Fundamentals and technicals go hand in hand. Price can be at a support or resistance, but it can't push past that area. And why? Do you realize, why do you think it won't be able to push past that area? The market is waiting for a specific announcement to allow it to go through. Fundamentals will push it right through. So if price is at a resistance and you're wondering, why is price not breaking its resistance? It's been consolidating, and it's not going down either. It's just consolidating. It's waiting on, you got to check the announcement, you got to see if there's an announcement that come out, and sure enough, there's an announcement that's going to come out at 2 o'clock that day or 8:30 in the morning the next day. That when it does come out, you'll see it pushed it right above that section. So technicals, sometimes when it's consolidation, wait for the fundamentals to push it through. They need more strength, more buyers, more believers, because the more people buy it, the currency pair, the more it goes up. The more people sell it, the more it goes down. And the less people buy, the less it goes up. The less people sell, the less it goes down. So when the fundamental analysis comes out and everybody sees the same announcement, the same monetary policy, the same GDP report, which we get into in series 3, and they all feel the same way, that pushes the price up or down depending on how they feel. Fundamentals and technicals should go together. So if they are opposite of each other, try and stay away from it. Meaning, if the market is going down, but leader came out with an announcement and it pushes the market up, don't just switch your bias, because you're just switching to do whatever the market's telling you. You got to realize and understand what's going on. Also, you'll see in a later section that the market will never go down and abruptly go up. It'll go down and consolidate, wait for that fundamental announcement, and then it'll push up. But it'll leave you clues, and make sure the clues line up together. Oh, it's a bunch of dojis. Oh, it may be reversing soon, or oh, it may push past the support depending on how this announcement comes out. Don't just blindly sell or blindly buy, and then the news comes out and they're like, oh, let me switch so I can make some money. No, you don't know how to trade. You know what I mean? But even though fundamentals play a part in the Forex market, they are more popular in the stock market. Investment banks and hedge funds use it a lot more than we do, because obviously it relates to a lot of companies in the stock market, the equity market. They rely on what the economy is doing. Whereas the Forex market relies on, currency pairs everywhere. They don't just rely on the stock market. They don't just rely on, the U.S. can have a monetary policy that comes out, and that'll definitely affect the overall stock market. But it just affects the U.S. dollar and the currency market. You can trade Euro, GBP. You can trade all the minor pairs as well. Last thing, at any moment in time, something unexpected can happen. Remember that. I remember, when Brexit happened, when I was trading in, I want to say June 2016. I was in Boston. I was trading GBP USD, and I got out the trade. And then, I was hanging out with one of my friends, and then, I checked my MetaTrader 4, and the market done dropped 2,500 pips. I'm like, what the hell happened? And then obviously, the UK decided to leave the European Union, which we talk about in Series 3, which is very important. I mean, Series 4, which is very important. But just understand, at any moment in time, something unexpected can happen. So always make sure you are on your P's and Q's, and you're always understanding what is going on and staying up to date with the current market conditions. So, quick video, you want to understand the reports that are coming out. So, these are the main central banks. The United States is the Federal Reserve, the EU, European Central Bank, the UK, the Bank of England, Japan, the Bank of Japan, Canada, the Bank of Canada, Australia, the Royal Bank of Australia, New Zealand, the Royal Bank of New Zealand, and China, I spelled Qian, but China, People's Bank of China. So these are the main central banks, so look out for announcements from them when you go look at some of these, obviously reports. what you should know that affects technicals, monetary policy, interest rates. We dive deep into, fundamentals in series 3, inflation, gross domestic product, GDP, non-farm payroll, NFP, Federal Open Market Committee, FOMC, any comments from central bankers, economic chaos or economic prosperity, tweets from Donald Trump. You want to make sure you understand, everything that's going on, and these central banks will have announcements on these sort of things, these announcements. And I get into it in series 3 for sure, talking about like specific details of this and giving examples and give you guys a great understanding of it all. I'm trying to get you guys to understand reports. They will come out with reports on the monetary policy, on the interest rates, on inflation. Well, monetary policy is the laws that govern, interest rates and everything. But, they come out with reports on inflation, on gross domestic product, how many people are unemployed or employed in the U.S., which is basically non-farm payroll. And one of the websites you can look at for it, I give you guys, better and different websites, but like just a basic one right now. If you type Forex Factory right now, you can type it right now. And you can even see, obviously, go back here. You can even see over here, some articles about it. But if you go over here, everything is here. Today is obviously Saturday. But if you go over some and over some more, it shows you, the announcements that's coming out. Yellow means it's not that important. Not that important, apparently. Red means it's very important, all countries. Orange means it's, has medium impact right here. So FOMC meeting minutes, crude oil inventory. So all you got to do is, you can see the forecast, basically what they're, projecting it to be. You can click this and it'll show you, potential forecast and what it previously was and what it actually ends up being. Don't know why it's not showing now, but let me give you an example of like NFP, like the first Friday of every month, which like I said, dive into in series 3. September 4th, NFP, non-farm employment change. So usually, okay, right here you see it, the forecast, boom, previous, and actual. So like I said, I don't want to break it down now. I break it down in full detail in series 3. I'm trying to get you guys to see that there are places to see where reports are coming out at, and then you want to obviously emulate it on the actual chart when it does come out. So I hope this video helped you guys out a lot, but all I'm trying to do, like I said, this is still a basic course. I'm not trying to overwhelm you guys in the intro course. All I'm trying to do is trying to, give you guys everything, you may need to know, aka the central bank, just basic information, right now, because you don't need to understand all of it right now. You need to understand it in series 3 and 4 when you start getting deeper into trading, like super deeper into trading, and you start trading, part-time and full-time. But right now on a learning basis, you don't need to, know all of it right now. You need to just understand, a little bit of it, keep it moving, focus on trading, focus on, technical analysis, then work your way to fundamental analysis, and then we're going to tie it all together, which is what we do in this series.